Welcome to Real Talk, Real Estate Discussions with Andrew Kirsh. In each episode, Andrew interviews industry leaders. We'll hear their real-time opinions on today's market, their background and unique career highlights, and guidance for newcomers into the industry. You can find this show at sklarkirsh.com and on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, and more. Now here's the host of Real Talk, Andrew Kirsh.
Episode 76 of Real Talk. Well, natural disasters are following me in 2025. We all know about the fires of the Palisades on January 7th when I celebrated my 50th birthday a couple of weeks ago. There were fires throughout the hillside of Bend, which made the normally scenic views of Bend disappear. And then this past week, I was in Hawaii with my extended family, my in-laws, my sister-in-law and her kids, and my wife and my kids. And what happens? An 8.8 earthquake in Russia, which caused a tsunami, which caused the entire coastline of Hawaii to be evacuated. And we were evacuated not just once, but to two different elementary schools until about 1 a.m. In the end, it turned out to be pretty much ado about nothing, although there was some damage on the other side of the island. But needless to say, I am done with natural disasters in 2025. And a lot of people have called me up and have sent me text messages saying, Kirsh, we want to know where you're going next because we are not going to go there. So thank you for that. On this week on Real Talk, I have my friend and client, Alex Rozenfeld from Freshwater on the podcast. Alex is a fantastic sponsor, operator of multifamily assets, has built a company from the ground up, literally from nothing to $500 million of assets. He'll talk about how he started, how he walked the streets of San Francisco as, I think, as an assistant or as a helper to a parking meter mechanic attendant to now owning $500 million of real estate. It's an unbelievable story. So I hope you enjoy my conversation with Alex Rozenfeld. Hello, welcome to another edition of Real Talk. I'm here with Alex Rozenfeld, founder of Freshwater. Alex, how you doing today?
I'm doing great. How are you, Andrew?
I'm great. Wow, that microphone is very powerful and large. I love it.
Thank you.
Where do I find you today?
I am in Bradwood City, California, in the Bay Area.
Beautiful, great. And where are you from originally?
I am from Ukraine. Originally came here about 30 years ago.
Wow. Well, I'm sure we could do a whole podcast on what's going on
in Ukraine
geopolitically.
But yeah, well, it is a very sad situation, and my aunt finally is getting out very soon from Ukraine, so we're bringing her here, my mom's sister. But it's been very tough for all my friends, all my classmates, and hopefully will end soon. But yeah, it is a tough situation.
And so when you came to the United States, where did you end up?
I ended up in San Francisco, and I did a few odd jobs before going to Thunderbird Business School, and it was an interesting story. I was working as a tester, testing parking meters in San Francisco, and I was working with I was a representative of the company that installed those parking meters, and there was a city representative working with me, accepting those meters, and it was a very unassuming guy. And but he was taking me to lunch every day and paying for that lunch.
Well, that's nice.
It was very nice to me, and it lasted for like 3-4 months probably. And every day he was taking me to lunch. He liked all the San Francisco places to go and get a nice lunch. And in the middle of it, he told me that he owns like 50 units in San Francisco. 50 apartments, and that he gets a lot of nice income from that. So he can afford all these lunches and feed a new immigrant from Ukraine.
Wait, what? So what year was that?
It was around 2000. So it was.
So his primary job was to fix
He was a meter technician.
a meter technician who on the side owned apartment buildings in San Francisco.
Yes, he owned apartment buildings in San Francisco. And
Wow.
that's kind of planted a seed in my head. Well, it's an interesting business. And when I graduated from business school, I decided that I want to go to commercial real estate.
Now, the real question is, do you still fix parking meters?
No, I'm just feeding them now.
But one last question on commentary on parking meters. I find them so much more challenging today than when they were 25, 30 years ago when you just had to put coins in them. The credit card doesn't work half the time. The machine doesn't work. And now some of them are so advanced, they don't even accept credit cards. You have to do it through an app. And I don't know. It's the more we talked about before we even got on this podcast, the more technology, I feel like sometimes the more challenging simple things are.
Yeah. And that's it's just pay by phone now, that the app that I'm using.
Yeah, exactly. All right. So let's talk about Freshwater. For my audience who may not know, what do you guys focus on?
So Freshwater, first of all, we helping our investors to invest in real estate and enjoy passive income, preserve capital, enjoy all the tax benefits of real estate without actually managing it, without owning it. So our investors, and we have roughly 300 families invested with us over the last 10 years. We founded the company in 2015. So these 300 families invested with us roughly 150 million and over the years. And we returned back in the form of distributions and sales proceeds about 50 million, so about 35%. So our principals invest in all deals. We invested more than 10 million in all our acquisitions. We provide average cash distributions around 6.5% from all our properties. And on full circle deals, we delivered about 20% IRR to our investors.
That's great.
So second of all, we own an operator. So we own deals in 5 states, and in Washington, in Oregon, in Colorado, Kansas, and Columbus as of last year. We own about 1,400 units, and total portfolio value around 400 million. And throughout our 10 years, we transacted on $500 million.
So when you were coming to this country and walking the streets of San Francisco with that technician, getting taken out to lunch, did you ever think you'd have a $500 million asset value real estate company?
No, I couldn't. Absolutely, I couldn't think about it. I knew that I wanted to have my own business, and I always kind of had that goal to own a business at some point in my life. And when I turned 40, I talked to my wife and I said, "Well, it's time for me to try it out. I'm getting to that age where it's probably the last chance for me." And she was so kind, and we agreed that I'm going to take 6 months away from corporate job and try it out. And so I decided that I want to do apartment buildings at that time. And within first 5 months, I closed the first deal with 6 investors in Mesa, Arizona. It was a 44-unit building, 1.9 million purchase price. And in order to do that, I sold, and I don't know how she agreed to that. We sold our townhome to get a capital for our first acquisition. And then we rented for 7 years after that.
Incredible.
So, but I was able to go to investors and tell them, hey, I am putting myself $200K in this deal. Would you guys go along with me? And that's how I was able to raise money for my first acquisition.
And those investors, friends, family, or people you didn't know well?
Friends and people I knew. Yeah.
Uh-huh.
Yeah, people I knew. And there was one guy, very good friend. He was one of the first engineers at WhatsApp, and after WhatsApp was sold, he got a nice chunk of capital. And when I talked to him about my plan to start a business, he said, let's go for lunch, and we did. And he was kind enough to bring 3 other friends from WhatsApp to that lunch, and they all agreed to invest with me in my first acquisition, and they still invest in every deal with me. Which
is the tech community in San Francisco very intrigued with real estate and want to invest their liquidity into real estate?
Yeah, if people know about it, I quite often I find that when you say real estate to people, they think it's a single family home. I need to buy, I need to manage, and it's a hassle, or I need to buy Airbnb. Quite often people don't know about this type of investing, and it takes education on our part to introduce people to multifamily investing, and it's a passive income for them, and it's a great way to preserve capital.
It's funny. I think the difference, I mean, there are many differences between Northern California and Southern California, but I feel like everyone you meet in Southern California is in the apartment business or in the real estate business, and they're buying real estate. And in Northern California, I'm sure everyone that you meet,
everyone in IT business.
They're what?
Everyone in IT business in California.
IT, they're in tech, they're in AI, and you don't see those people running around in Southern California as much. So
yeah. And I mean, not most of us investors, but good chunk of our investors work at big IT companies, Oracle, Facebook, Airbnb, you name it.
So at what point did you look to your wife and say, we made it, we're going to be fine? I'm glad we made the career change.
I think one point was when she decided to leave her job and join Freshwater as a partner.
I didn't realize that. Did I know that?
I don't think so. I don't publicize it very often, but
so what does she do?
She's running our investor relations and marketing.
I did not know that.
So she's very involved in freshwater operations. It was about 3 years in when she decided, okay, it seems like it's working. I want to help you out, and it sounds like it's fun. And yes, she's a big part of Freshwater.
Yeah.
But I think when we were able to buy a house, and real estate is not cheap in Silicon Valley. So when we were like 7 years into the freshwater operations, we finally bought our own place. So that was kind of time when we felt a little better that we were on the right track.
So let's drill down on where things are right now, and we're recording July 2025. For the last 3 months, our law firm has been extremely busy, and that's coming off of 2.5 years of being slow with new transactions. It was more of our clients were playing defense, less offense, and now our clients seem to be playing more offense than defense. Yet, I don't feel there's been a change in cap rates. I don't feel there's been a change in interest rates. The 10-year treasury sort of hovers around 4.4. And so what has changed? Why? And maybe you disagree, but we're at least seeing more transactions. Have you guys been active? Why am I seeing this change in activity when the capital markets seem to be in the same position they've been in the last couple of years?
Let me ask you, when you say change in activity, is it refinance activity or acquisition activity, disposition activity?
Yeah, I'm seeing more acquisitions, dispositions, not necessarily refinancings, although there are. I just feel like we are busier with actual transactions as opposed to loan modifications, dealing with the lender and playing more defense, right? Our clients are playing more offense.
Right. Well, as you well aware, we had an active last year. We had 2 acquisitions in Columbus, total 67 million. But this year it's been very tough to find a good opportunity for us, and we are very specific what we acquire. We buy newer assets, 90s plus, Class B and better in good locations with growing population, growing with the job growth. And it's hard to find deals in those B and A locations. And it's hard to find positive leverage. We've done. I mean, we bid on several deals. At the end of the day, sellers decided not to sell it. So there was that disconnect in pricing. So it's been challenging this year. But operation-wise, we're in a good, solid place. We 95, 94% leased. Collection's been strong, and I think we positioned well to acquire another 1-2 assets this year, but it's not happening yet.
And so what do you need to see? It's just the bid ask spread is too wide. In terms of cap rates, whether it's cap rates, whether it's price per door, whether it's cash flow, what are the metrics that you're looking at that you're just not seeing that's preventing you from transacting? And I guess other people are just outbidding you, and so you're being very conservative and sticking with your fundamentals and not stretching. So what do you want to see in order to transact?
Well, I want to see positive leverage because we are yield driven. So we here to provide positive cash flow to our investors. We send them monthly checks. So our average distributions around 6.5% right now, and typically we start these distributions in 90, 120 days and we typically underwriting for 5%. And that's where we're struggling to find good deals that we can achieve that within first four months of having these deals, of managing these deals.
So when you talked about the locations that you guys transact in, state of Washington, very popular state, Oregon, Colorado, do tons of transactions in those 3 states. And then my ears perked up. You said Kansas, and then I think you said Columbus, Ohio. Now, we've actually done quite a few deals in Columbus, Ohio with you and other clients of mine. But Kansas, tell me about Kansas, because that's not a state that you often hear of people based in California transacting in the plains.
Yeah, exactly. And I didn't know anything about Kansas before going there. But so the short story is we saw that people moving away from coastal markets when the COVID hit. Mm-hmm. That was 2020 when we acquired our first deal in Kansas City. The long story is we have great partners. We work with company Griffiths Blessing. Buck Blessing is the owner of the company out of Colorado Springs. They manage our deals in Colorado and Kansas. And a few years ago, probably 2017, I was trying to buy an asset from them when they were our managers, and they own about 2,500 units as well. So they were selling an asset in Colorado Springs, and I was a bidder on that asset. And I went through the interview, but I didn't get the deal. And after it happened, I just thought a little bit, and I called Gary Winiger, the second in command at Griffiths Blessing, and I told him, Gary, I just tried to buy, and I tried a few times. I just tried to buy an asset from you. I didn't make it. I wasn't best in final. So for me, maybe instead of me bidding on your assets, maybe we can go out and buy deals together. And Gary said, well, it's a good idea. Let's explore it. And in 2017, we did the first co-GP deal with them in Colorado Springs. We sold that deal in 2022, right before the interest rates started to
you must have crushed that deal.
We crushed that deal. That was the best deal ever in our history. I think it was close to 3x on capital invested.
Incredible.
And Gary happened to be from Kansas City, and he was looking at Kansas City even before COVID. And when the COVID hit, he's like, "Guys, we really need to go to Kansas City. There is this great area of Kansas City, Overland Park, Johnson County. It's like San Mateo County of San Francisco Bay Area. You have tons of jobs. You have great retail, good restaurants. There is huge JCC in Overland Park. The Jewish community is huge. And I flew there. I didn't know anything about it. I saw that it's clean, it's nice. And it was 2020. All retail was full, no vacancies. Everything's clean and nice. No boards on windows. And we started there. And now we own 3 assets in Kansas City. We own 2 assets as a co-GP with Griffith's Blessing, and we own 1 asset as a direct ownership.
So when you have such a good experience in Kansas City, why do you still transact in states that are very frustrating for business owners, and in markets where it seems like landlords are under attack and there's rent control ordinances sprouting up all the time and homelessness issues and et cetera, et cetera?
I know what state you mean.
Well, a state that we live in, Portland, Seattle's had issues, although Seattle, I feel, is coming back. It's, I help raise money for clients, and there's so many equity providers, not necessarily syndication LP investors like your investors, but institutional investors who have put a red line through any blue state right now. They just are uncertain of the political structure of these states and what laws they could pass that could harm real estate investors.
Yeah, I talked to one experienced real estate investor, and he said that his best investments are in California, and he invested all over the country. He said those long-term investments are the best in California. So we're gonna maybe test it, but we don't own anything in California, and we didn't buy anything in blue states for a while. But I can see very good energy in Seattle market, for example.
Yep.
We own asset in Everett and Linwood, Federal Way and Kent. And in Linwood, we see amazing trade outs, amazing rent growth. And I think it's related to the completion of the light rail station in Linwood that connects people to downtown Seattle. And after Amazon asked everybody to go back to office, I think that's what's impacting pricing there. You have great schools there, you have great employers, they're not going anywhere. So I want to stay there. I want to stay in Seattle. It's a great market, and it's been performing well. We actually looking at 2 assets right now in Seattle. We want to recap our existing investors, and we'll look at historicals. I wanted to kind of underwrite the recap, and I looked at the rent growth since 2017, since we owned those assets. And one asset we had 4.5% rent growth average. Another asset we had 5% rent growth average. So which is amazing. We typically underwrite 2.5-3% rent growth.
Yeah. Now, when you transact in a market like Kansas City or in Columbus, do you have to convince your investors, trust me, follow me to these areas, these are high growth areas, we're gonna do well, or do they, what is their perception of investing in parts of the country that I'm sure they've never been in?
Surprisingly, we have quite a few investors that were born there and now live here, or someone who went to school there. And actually, it was interesting. I even probably 5 years ago, I heard from one of our investors, and she told me, "Hey, you should look at Columbus, Ohio." I went to Columbus State and Ohio State. And you should look at New Albany because it's a fast developing great area. And we started following Columbus at that time, and we ended up there. but it's easier to invest, and it's easier to explain to our investors why we're investing there when there's a good story coming out of that city. And whether it's Intel plant with 20 billion construction budget and 4,000 jobs, or Samsung plant in Kansas City, and new airport in the city that's bringing new businesses to the city. So it's when you hear and know those economic developments of that specific market, that it becomes my job becomes much easier.
Now, are you looking for the next Kansas City, the next Columbus to invest in? That's a Midwestern or Plains location.
Yeah, I think Iowa is a great market, and we're bidding on assets in Indianapolis as well. So that's a strong, steady, stable market as well. And I know we had a few guests from Midwest, and that's the sentiment they shared, and I totally agree with that.
Yeah, it's over the last couple of years, as there's been oversupply in the Sun Belt, as there's been a loss of jobs or migration out of California and to other places, and political challenges that I just spoke about. We've done more deals in the Midwest in the last 12 to 24 months than I have in the last 12 years. And it's bread and butter, and people are making money. I was going to say there's nothing sexy about it, but you know what? What's sexy is making money.
Yeah. And I think it works well with our model, because we're long-term holders. We're not flipping properties within 3 years. We don't have any floating debt, and that's why we can sleep at night. So that I'm very conservative. We at the beginning we decided that we're not going to take a lot of risk. So that's why at this moment we distributing cash from all our properties. Our average debt is about below 4%, and average expiration in 29. Say it again.
A lot of my clients have a hangover from their 21 and early 22 purchases, and we're still working through it. Do you not have any of those legacy assets that are holding you back or making you not sleep at night?
No, we're in good shape.
That's great.
And that's what I hear from my investors as well, that they telling me that they invested with several groups, and you guys still keep distributions while other companies just stop them, or asking for additional money to refinance their deals.
Alex, in our remaining moments, I feel like you are the walking, living, breathing American dream, right? Immigrant from Ukraine, came to the United States, didn't have a robust network of people to tap into, didn't have a real estate background, and now $400 or $500 million under management. What advice would you give to, maybe it's young people, maybe it's people struggling in their jobs and they're in their 30s or maybe in their 40s and they want to get into real estate, but they feel that it's so daunting, from raising money to having broker relationships to knowing how to pick the right properties. Obviously you did it, but what advice can you give someone that's looking to crack into the real estate market?
I would say give first. Go and volunteer. Go and meet people. So I met my partner, and I didn't mention him yet, but I should have at the beginning, because his name is Barry Kahn. He's as he likes to say, fifth generation San Franciscan. He is very involved in Jewish community in the city of San Francisco, and he was just amazing human being that helped me to build this business, and he's still my active partner, and we're doing it together. And without him, I wouldn't be able to accomplish these things. But what I would say that, yes, go out, volunteer, meet people. I met half of my investors through the volunteering as well. Be active in the community, and just do it. If you have a goal, if you have a dream, stop overthinking it and just go and do it. I would never think. I never thought that I would be here today with a big portfolio, with 300 people trusting us, with plans to increase and grow this business. But I started small, and it just grew, and I'm enjoying every day of it.
And a supportive wife. I mean, a lot of my colleagues and friends, one of the things that's holding them back is a spouse, whether it's a husband or a wife, who are concerned about not having that steady paycheck and realizing that the real estate, to make money in real estate, is a marathon. It takes years. It's not a everyday cash flow situation, and you have to aggregate a portfolio, and it is challenging to go from a steady paycheck to being an entrepreneur.
Yeah, that's a great point. Absolutely, that support system is crucial.
Absolutely.
And listen to Andrew Kirsh podcast, because you can learn everything about the real estate business.
Yeah, not because of me, but because of my guests. That's for sure. Look, Alex, I truly appreciate you coming on. It's amazing to see what you've built. I love working when you have a new deal. It's really a breath of fresh air to work with Freshwater. You guys do it with such professionalism, and I know your investors have been really happy with the results that you've been able to produce. And so I just wish you, your partners, and your family all the luck and success in the future.
Thank you so much, Andrew. Yeah, best of luck to you, and keep up with these great interviews.
I appreciate it, Alex. Thank you so much for coming on.
Thank you. Take care.
Bye-bye.
You've been listening to Real Talk, Real Estate Discussions with Andrew Kirsh. You can catch prior episodes at sklarkirsh.com and on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, and more. Thank you for your positive reviews, comments, and for sharing the show with others.